So I'm relatively new to Chicago. I moved here 5 years ago. And I've heard more than once the phrase, "We don't want nobody, nobody sent." I don't think anybody sent for me, but luckily I've been able to be able to meet many of the leaders here in Chicago in the work that I do, especially organizations like Housing Action Illinois, Chicago Neighborhood Housing Services, organizations that are part of the fabric of this amazing city. One of the things that Chicago is blessed with is a cadre of very involved, engaged, and committed philanthropists. Not every city has that, and I'm not necessarily sure Chicagoans truly appreciate the fabric of interconnectivity between the civic and the corporate that Chicago has. I've lived in New York, I've lived in the Bay Area, I've lived overseas. We have something special here in Chicago. One of the organizations that makes that special is the Field Foundation, along with other organizations like Chicago Community Trust, the Grand Victoria Foundation. They all talk to each other, and they have a commitment of the vision of how they want to see this community and its residents. And they each take certain paths that's collaborative in terms of trying to achieve that vision. We're very lucky today to have as a moderator for this next panel of where do we go from here, the president of the Field Foundation, Daniel Ash. Please welcome Daniel.
Thank you. So I guess I'm going to try to extend the metaphor. We had Christmas past, Christmas present, we're Christmas future. Before I have our panelists introduce themselves, I moved to speak to my colleagues in philanthropy. At the Field Foundation, we fund community organizing. And oftentimes in philanthropy, the question is asked, why is community organizing so important to social change? Because many of my colleagues don't commit to funding organizing consistently. And I think as I was sitting this morning listening to the first panel, the second panel, it dawned on me, this is the evidence of how important it is to fund organizing. Laws change when people are mobilized. I'm the moderator today, so I'm not going to spend too much time editorializing. That's their job. But I just feel compelled to say to my colleagues in philanthropy, use this moment to go back into your shops and make a commitment to funding that type of organizing we need to advance the movement. So we're going to begin. I'm going to ask my panelists here we have 50 minutes to talk about what the agenda is going to look like for the future. Like, where does this movement need to go? So I want to be really mindful of time. So if each of you could just spend a minute introducing yourselves and really speaking to like what brings you to this work. Let's start with Dave.
Great. Can everybody hear me? Great. Good morning. It's great to see you. Thank you for joining us for this. So my name is Dave Uegio. I am the Chief Operating Officer of a nonprofit called Prosperity Now. We do a lot of work to support community groups all across America in this work of community development finance. We have 90,000 members in our network all across the country that are dedicated to this work every day. And so very well aligned, I think, with the foundational spirit of the law. I'm also here in my capacity as a former regulator. I was the acting director of the Consumer Financial Protection Bureau for a year at the start of the Biden administration. For those that don't know, the CFPB is the agency, still today, that is legally required to ensure that Home Mortgage Disclosure Act data is made available and obviously is the primary enforcer for those laws at the federal level. So really excited to be here.
Good morning. I'm Kristin Faust. I'm the executive director of the Illinois Housing Development Authority, which is your state housing finance agency. Our mission is the creation and preservation of affordable housing. And I landed in Chicago in 1985, 2 years out of graduate school, having learned about something called the Community Reinvestment Act and saying, that's what I want to do. And I came to Chicago in started a credit training program at First National Bank of Chicago, you heard mentioned earlier today, now JP Morgan Chase. And have since spent my entire career doing my best to see that capital goes to places where it should be going but isn't. And so I've been a banker, and I've also run NHS, and now I'm in government. I'm trying to build bridges, cross the chasm, and understand that without fair access to capital, we actually won't ultimately have a democracy.
Indeed. Laurie?
I'm going to start really by pulling on the thread you started, Daniel, with your plea to philanthropy, to continue it, to say those who are in philanthropy, please stop making it so damn hard for organizations to access the funds. These long, burdensome, insane grant applications with these logic models and all kinds of craziness. It's got to stop. It's got to stop, especially if we're trying to create equity within these smaller grassroots organizations that may not have a whole development department. So that's my plea. With that, that was my own personal platform there. I am the Associate Vice President of Housing and Community Development for the National Fair Housing Alliance. We are a civil rights nonprofit organization entirely dedicated to eliminating discrimination in housing. We also serve as a trade association of sorts for fair housing organizations all across the country. A couple of our members were on the previous panel. And NAFA comes from a Where You Live Matters framework, which looks at not only, the house and the surrounding communities, but all of the things that impact the access a person has or does not have to everything they need to live a financially prosperous and physically healthy life.
Indeed. Thank you for that. So I want all three of you to respond to these prompts. And I'm taking our first two questions, and I'm going to sort of bring them together. And these are big questions. Question one, has HMDA fulfilled its promise? And in responding to that, I also want each of you to speak to this question of what remains unaddressed with HMDA? Let's start with Kristin.
So I actually think in many, many ways, HMDA has fulfilled its promise. In fact, it's exceeded, I think, what Gail and the whole national coalition might have imagined. Here we are 50 years later, and you just heard from 3 individuals in 3 different states about how they have still used HMDA today, have used HMDA, and will continue to use it to get legislative change, to get capital flowing where it should be, and banks making loans. And so I think that that's extremely powerful. And sometimes we don't focus enough on our successes, and we have to really pay attention and acknowledge the successes. It doesn't mean the work is over. It doesn't mean we won't, be like Sisyphus, right, pushing that boulder up the hill. But it's done a lot. It was a 1-2 punch, though. I want to point out, HMDA alone is very useful, but it was the data that then allowed the Community Reinvestment Act 2 years later in 1977 to get passed, which was an amazing piece of legislation, one of the best of the 20th century. And that has then, that 1-2 punch basically created the opportunity for billions, and actually they estimate trillions of dollars now, to flow where I think a lot of it would not have otherwise.
Good too. Laurie?
I agree. In many ways, yes, it has fulfilled its promise. We have data to concretely reveal patterns and practices in lending that can help with enforcement and development of programs to address those gaps. We know that discrimination and redlining is still rampant, just in much more subtle ways than it used to be. But HMDA is intended to be a tool to be used alongside other laws and regulatory structures. And I would argue that many, if not most of them, have never been fully implemented or enforced. There are still yawning gaps in homeownership rates. NAFA's State of Equity and Homeownership report that was released earlier this year revealed that white homeownership is 60% higher than black homeownership. And that includes a 14% increase in black homeownership between 2019 and 24. But still, even with that, it's not really much higher than the black homeownership rate when the Fair Housing Act was passed in 1968. So now that we're in a place where the government is abdicating its responsibilities, both transparently, but also illegally and subversively, this entire year has kind of been a dystopian nightmare of whack-a-mole of putting out dumpster fires. But they're not really, dumpster fires are kind of small and contained, right? These are not that. These are these big, using on the same analogy, these are like giant wildfires that destroy entire cities and towns. So these are things that are going to have impacts for years and decades to come, if not addressed in a really meaningful way now.
Indeed. Dave?
Sure. So one of the things I was hoping to bring to this conversation is this regulatory perspective, since I was the direct beneficiary of the incredible promise and power of HMDA when I was at the Bureau. And I have to say, I think, to the points made by the other panelists, HMDA has really, in my mind, achieved well beyond the vision that created its initial inception. And I'll offer up a couple of pieces of evidence about that. I think at CFPB, one of the things that was so hard being at that agency is that we had responsibility for the entire consumer financial marketplace, right? And so, yes, mortgage is the biggest market in the country. Mortgage is a key part of people's financial lives. People want to achieve the American dream of home ownership. It is not the only aspect of their financial life. On the way to that home ownership dream, they have credit card bills and student loans. If they experience distress, they are going to be pursued by debt collectors. They might seek short-term credit products and financing. And that, this is all the more relevant today, in which there are all sorts of new products hitting the market seemingly every week. Buy now, pay later advancements and the like. It has become a very complex landscape consumers need to navigate. And so sitting up in Washington with responsibility for the entire continental U.S. and the territories across all of these different financial marketplaces, I got to see firsthand the incredible amount of information we had and the incredible amount of knowledge we had about mortgages relative to those other products that served as sort of the bedrock of our ability to then enforce vigorously those laws. So if anything, I think the future of HMDA, the future of consumer protection that I would like to see is one that takes that model and scales it sideways to all these other areas. This is a bit of a deeper cut in my career. I spent the last year of my federal career at the Federal Housing Finance Agency, which almost, I would forgive you if you don't know, but that's the regulator for Fannie Mae and Freddie Mac and the federal home loan banks, solely focused really on mortgage origination, both commercial and residential. And again, I got to see all of the kinds of incredible analysis we were able to do very quickly based on the power of that information that I would have killed to have when I was at CFPB in any other product line. People would come up to me when I ran CFPB and say, well, what about debt collection? Here today, and even then, we could approximate the number of debt collectors in America, but we didn't know, right? We lacked that level of granularity to understand where to focus our scarce resources. Not so in the mortgage market. So to me, just the fact that HMDA stands alone as that gold standard of data for us to take all of our collective rights and enforce them on your behalf, on my behalf, is unrivaled, thanks to HMDA, and I'd like to see more of it.
Yeah, indeed. Dave, I really appreciate you taking us there, because I think we need to spend a significant amount of time here really thinking about the future and what the advocacy agenda needs to look like, over the next 5-10 years. And so I want each of you to talk about sort of what needs to be on that agenda. And I really want to, in the prep call, we had a really interesting conversation about the changing marketplace in which HMDA exists and how the law needs to catch up to this changing marketplace. So I would have love for each of you to address this question around what should the advocacy agenda look like moving forward. Laurie, you want to go first?
Sure. I've jotted all my notes down. We're kind of skipping around a little bit. So I'm gonna say, from the perspective of education of policymakers, context. There's a lot of context that's missing and a lot of context that we'll need to consider. In the past few years, we've been commemorating 50th anniversaries of a lot of different things, the Fair Housing Act, ECOA, HMDA, CRA, and so on and so on. All due respect to all the baby boomers in the room. You're clearly the good ones because you're here. But Congress is nearly half of that generation. So when you extrapolate that across state and local politicians, business leaders, et cetera, you have a political and economic decision-making infrastructure whose frame of reference is a time when people could graduate from college and afford it, by the way, buy a home, raise a family on one income. This morning I revisited an article from a few years ago that explains that since 1975, the top 1% has taken 50 trillion, that's trillion with a T, from the bottom 90%. And that income and wealth equality, that's staggering. So those were all intentional choices that were made by policymakers in these intervening years. The choice to allow, deregulation, allow corporations to create monopolies, allow Congress to, engage in insider trading, if you will. So this structure that we have that's created this wealth inequality, we have these conversations about the affordability crisis. We need to be like toddlers and say, why? This income, disparity, wealth disparity, it's really what it comes down to. And I think Horacio touched on that a little bit in his opening remarks. But that's a big piece of context that's missing from a lot of these conversations.
Kristin?
Oh, I'm next. Well, one of the things I see, this is staying within the context of mortgage lending itself, because there are bigger questions and there's great lessons to be learned from the success of HMDA and CRA. But when HMDA was first passed, I think most mortgage loans in America actually might have still been being made by savings and loans. And then that morphed to banks. And now the majority of mortgage loans made in America, it's over 60%, are from these mortgage companies. Rocket Mortgage and Guaranteed Rate, and whoever. I bet most of you, if you own a home, probably don't have your mortgage. You might have gotten it from J.P. Morgan Chase, but it's the fewer of them. And so one thing to think about, and I was going to say, at IDA, we also help promote home ownership. We offer down payment assistance. This year in 2025, we'll have created over 7,500 new first-time home buyers. We buy the mortgages and then sell them to Fannie and Freddie. But the most of our mortgage lenders at IDA are not banks. So what does that mean? Well, the banks are still subject to federal CRA, and the mortgage companies don't have CRA in the same way. Horacio's got to educate me on Illinois CRA and see how where these mortgage companies come in. But it's kind of like you have the light shining, but the accountability isn't there in the same way. And I think we have to think about ways of holding of accountability for all the parties that are doing mortgage lending. And then you have to layer on top of that the fact that technology is, like I don't know if you've ever called Rocket Mortgage. You know, you call them, and in 30 minutes, they're calling you back. They're sending stuff. You can fill out your application. You might be able to have a mortgage fast if you have a high credit score. But and some of the banks can't keep up with that. So do we want to have a country where all the mortgages are made by this group of companies that maybe are not being held accountable back to the people? So again, that's a big lesson of HMDA CRA, and you heard it on the other panels, is the accountability back to the people in the neighborhoods. So what's that going to look like going forward for HMDA for the next 10 years?
Yeah, I really agree with a lot of that. I think when I think about the future of HMDA, I like to think about taking us back to the first panel, those things that made the law so distinct and miraculous at the time it was passed. And as I think about that, there are really two core pieces. One is about the inherent role of people in getting that law passed on their own behalf to use sunlight as a disinfectant to allow for private citizens to have knowledge and to close that information asymmetry about what was happening in the mortgage market. I think that's absolutely vital, not just for this marketplace, but for all consumer financial marketplaces, but certainly here. I think that power that emanates from the people is the most important part. I think that the net effect of that conception of the law is that the law has embedded within it certain values that I think are very important. It's a little abstract to think about laws as being, having embedded values, but if you think about it for a second or two, it's certainly the case. And as a regulator, a former regulator, you don't have to look more than past one or two laws to see that sometimes those values are different or in tension. And so by that I mean, in HMDA, there is an insistence on transparency that be broadly publicly available. And so one thing that I would suggest going forward is that data could be made more available, right? As a regulator, you are privy to a certain confidential instance of HMDA that gives you additional information about timing, about underwriting, about credit scores. Obviously, you want privacy safeguards around those things, but those things could be navigated if we wanted a more sunlight-filled HMDA for the future. One of the things that I think a lot about, or where I had an opportunity to navigate this again, was at FHFA, in which the amount that I knew about what was happening in single-family mortgage lending, certainly, especially conventional, was 100 out of 100. But the amount that I knew about what was happening in the rental multifamily marketplace, of which the GSEs are the dominant lender presently, not comparable. Right, and you see it, and certainly my fair housing colleagues know, the amount we know and are able to enforce on behalf of renters versus on behalf of homeowners is not symmetrical, right? And if anything, during a time in which we all know that things are maybe not fair, and we all know that things are not affordable, you don't like to see differences in the quality of justice available for people based on where they live or what products they buy. Certainly, I find that undesirable. I don't think it's an American thing, and I hope most of you agree with that. So as we look forward, I'd love to see those embedded values that were at the root of HMDA be cascaded out to other marketplaces, especially with respect to the rise of emergent technologies that I fear are going to greatly exacerbate both the information asymmetry and that lack of access to justice based on product.
Kristin.
I wanted to add, yes, amen to that. And then thinking about where else HMDA might go. So I've been told anecdotally, I'm looking at Ted, he might know for sure, that, and I did get to meet Gail Sankata. She served on the advisory board for First Chicago, and I was there, and they were really holding the banks accountable at that time. But my understanding is that part of her concern and how she started organizing wasn't just about lending and getting money to rehab the house. It was about home insurance. And that is becoming such an issue again today in America, about homeowners being able to get insurance and the rising costs of insurance. And then I was told, again, this was anecdotal, that one of the reasons, lending was chosen is because there is a national regulatory framework for banks, right? And there is still no national regulatory framework for insurance. Every state has their own insurance laws, insurance commissioners, whatever. And if you want to fight something, you have to go fight it state by state. Or if you want to make a change, you have to make it change state by state. So I think that we deal with multifamily housing as well at IDA, as well as single family. And the multifamily owners who are trying to provide affordable housing are getting socked with crazy insurance rate increases. And I just think that there's a corollary there. There's opportunity to learn and think about, and how do you, something's got to happen with the insurance industry. It really does. And so I'm hoping some of you activists out there can think about this and see what we've learned from HMDA and CRA and see what we can do around insurance.
Yeah. Laurie, I got a sense you wanted to add there. No? So then I want to double click into this. I'm starting to hear elements of an agenda, an advocacy agenda emerge. As we know, the HMDA was created because of a movement and the possibilities that those movement workers could see. As we think about sort of going forward, what are the possibilities? Like, what would you say to that young Gail Sincata organizer type today? Like, what should they be focused on? Dave?
Sure, I'll take. Yeah. I'm happy to take a swing at that. I mean, I think it's fitting to me that this convening is about the power of data, and that power will redound to whoever is able to seize it, right? And to me, it's very important that be the people. I think a lot about the foundational nature of this, and sort of going back to Ben Franklin, right? Like, is this going to be a republic? And his response is, well, if you can keep it. And as I think about our role as citizens and our role as consumers, HMDA is a perfect example of that. I think HMDA should be fought for fiercely so that we can keep it. And as I think about it in the context of emergent technology, I must express concern. I recently, this morning, was watching a bit of a documentary that was put together about surveillance pricing in groceries. I think most of us know that the amount we're paying for groceries seems too high. Certainly I'll speak for myself. And it was about the complex algorithmic underpinnings of real-time grocery pricing. I really encourage you to watch it if it's at all something you're interested in, whether it's emergent technology, consumer strength, and in rights. But it is the case that there are many firms outside the mortgage market that have staked an existential bet on granular data-powered optimization of prices to the highest point. And I think people know that. I think people know that when they walk into the grocery store and when they walk out with less food than they needed. That can't happen to the mortgage market. Like, the triumph of HMDA and the Fair Housing Act is that we collectively, as a body of citizens, said that this access to housing, this market, cannot be sullied with a singular profit maximization approach. We have tried to safeguard housing from this over the decades, and I think it's important that we continue to do so. But to me, if we're not able to use the data about housing to really ensure that our rights are being vindicated across states and the country, we're outgunned. We are not going to be able to defeat those algorithms going forward without constant vigilance from national regulators, but really from the people themselves.
Well, yeah, I agree. Laurie?
Yeah, we're in a place right now, or maybe even back in a place, I guess, where we're in an all-out fight to preserve civil rights. Forget about, the progress that we've been fighting for. This isn't a, one step forward, 2 steps back. This is a 1 step forward, 10 steps back situation. And Dave mentioned the stability, ensuring the stability of data. And that is a real fear for me, that by removing, the underpinnings of data collection and reporting, that we're going to end up creating this false narrative that's it's beyond just the plain old basic fake news that we hear about. And I'll put it in the context of fair housing violations, since that's the world that I live in. With HUD and DOJ kind of stepping out from that, with nonprofits closing down, with courts making bad decisions that impact organizational standing, flash forward in a year or two, the data could make it look like things are improving. Like, oh, look how many less fair housing complaints there are. Like, it's all working, everything's awesome now, right? Well, no, that's far, far from the truth. So that is a huge, huge concern for me. And, speaking of the progress, the administration rolling back a lot of the progress and the structures for progress, special purpose credit programs. The GSEs provided $82 million in reduced cost to over 57,000 buyers. So an estimated 70% of future home buyers will be people of color. So without fair and affordable mortgages, the system is going to fail. So that is some of the things that I think about in the forward-looking arena.
Kristin?
Yeah, I mean, I'll echo all of that. And it saddens me that we might have to go back, right, before we can go forward, which is we're going to need to protect the government data that's collected now. And so I listen to Kai Risdall, Marketplace, anyway, on economy sometimes, and during the government shutdown, key data like consumer price index and key economic data that it turns out the whole system relies on is published by the government, and unemployment, and we do fundamentally have trust in that data. It wasn't there, and so they were saying, well, there's this for-profit company that publishes it, and there's this company. And I realized what a nightmare it would be if we were reliant on private companies collecting data that is fundamental to how we operate as an economic system and as, a democracy, and that we really don't want that. We really do want reliable government data by government bureaucrats who have rules and regulations and accountability to us collecting that data. And so I think focusing more on more data collected at the government level, actually, saving and preserving what we have. I mean, these seems like very fundamental things. I really want to go regulate the insurance industry. But you might have to first have data preserved and new data collected. And then, you just got to weave in this, I don't know. I'm not in the advocate role right now. I'm running a state agency that is I'm mostly a lender. And so, but you've got to weave in this technology and this AI. The advocacy groups are going to have to hire like AI experts and technology experts and weave it in with your community organizing knowledge and listening to what is happening on the ground and pulling it all together. I know you're doing it already, somewhat, and we just got to do more of it.
Mm-hmm.
Well, so we don't have time to really talk about it too much. We're coming up on time, but the National Fair Housing Alliance does have a responsible AI lab that we're spending a lot of time and effort in looking into, removing algorithmic biases and looking at technologies.
Mm-hmm.
It's outrageous that I'm going to get charged something different at the grocery store than you are, depending where I live and what time of the day I walk in.
It is.
Just to build on that, I agree with you. It's totally outrageous. I do think it presents a potential opportunity, and that opportunity is about, again, the sort of multiracial coalition that came together around HMDA. If anything, one of the key takeaways I walked away from learning about this analysis is that discrimination is not only for protected classes anymore. It is being done in a manner in which it could be based on how much time you spend on an app. It could be based on how much time other publicly available browsing data exists for you. That cross-cuts protected class lines, ethnic lines, all of those things, and we all know it's not fair. And something that is broadly unfair should be able to be regulated.
You know, I want to, do we have time for 2 more questions? I want to take us back for a moment, because this point about protecting what we have. One way to protect what we have is to use what we have. And so I want each of you to respond to this question, like, what's most underutilized when it comes to HMDA, particularly from a consumer perspective? Like, what's the most sort of underutilized data set, if you will, when it comes to HMDA? Opportunities where we could be using it, but we don't use it.
I mean, I could start a little bit. I don't know that there's a, you know, and again, I'm not deep in the weeds of the data. My sense is more about people having more access to clear insights easily based on where they live, whether that's their state or the strength of their fair housing infrastructure or the sort of footprint of lenders within their area, whether that's rural or urban. It feels to me like we'd all do better if everyone had first-class analysis about this in as near real time as possible, because it could then create that dialogue with policymakers, both at the national level, but importantly at the state level. You know, there are a variety of states that have built state law infrastructure on top of federal HMDA subsequently, you know, and they're all the states that you would imagine. But I think those things are really proving their utility right now, right? If you live in a state where you have strong anti-predatory lending protections and strong data analysis infrastructure at your state attorneys general or at your county attorney's office or at the local university, or increasingly now at, you know, there are, I think, university and high school students that can be trained to do this analysis now with the tools that are available. So to me, it's about how are we thinking about local infrastructure, people, technology, and laws in the context of this framework to ensure that we're protecting our communities as much as possible.
Kristin, you want to react?
Yeah, it's a hard question for me to answer. HMDA, the answer isn't always to collect more data. There's a cost to collecting, you know, data. You want to collect enough to give you information and make it work for everybody. I think that HMDA is a tool and it gives us a lot of information, but we still just need to keep thinking about what other problems are we trying to solve. And I don't know that the answer is going to be by adding more data rows to HMDA. Instead, it might be, okay, we have the HMDA data, and now, but there's this two other pieces that aren't working. Like, what are those pieces, and how do we solve for them, maybe separately? Mm-hmm. I'm just posing that out there.
Gotcha.
Yeah, and I would say I'm a casual or a, advocacy policy user of HMDA data, not a data scientist. In fact, my statistics class in grad school made me cry. Two things that I have heard, and I acknowledge your point about adding more data is not always the way. But I joined NAFA from Realtor Association world. So I joined NAFA to head up an initiative called Keys Unlock Dreams, which is all about closing homeownership and wealth gaps specifically for Black and Hispanic Latino individuals. And what I continue to hear all across the country is, well, what about Asian folks? But when you look at data, those numbers are higher in wealth and education and homeownership and all of the things, but they said, that is treating this one category kind of as a monolith, and it doesn't break down the different categories, so some disaggregation would be lovely. So for what that's worth, that's something that I hear a lot. The other thing that I hear about HMDA data is the lack of credit scores, that's not a piece. I have maybe complicated feelings about that, because if we say, okay, we're going to add the credit scores, that seems to be an acknowledgement that the credit scores are indeed a good measure of people's creditworthiness, and I would argue that it's not. I think the whole credit scoring system should be burned to the ground and start over, reinvented. So again, for what that's worth, Those are two very specific items as terms of maybe what could be missing or what could be part of conversations.
Indeed. I promised the panel I wouldn't ask any surprising questions, but I may fudge that promise just a little bit. I'm interested in our notes coming into this, there was some commentary on AI. And I would love to, if you're willing, to just speak to like what opportunities and what threats emerge as you think about the emergence of AI, particularly as it relates to this issue.
It's fascinating and also horrifying is really what I think about when it comes to AI. You know, there's a lot of really interesting, intriguing opportunities with it, but also really, really scary stuff out there. There was a recent research, a recent survey that 82% of folks use, you know, AI, ChatGPT in learning about, you know, buying a home. ChatGPT is wrong a lot. So the notion that folks are now using ChatGPT and other AI platforms as a Google, as a search engine is like, it's terrible because it's, you know, it's all backward looking. It's whatever the large language model was trained on is where it's pulling from. And that can pull in bad data, it can pull in outdated you know, legal information. It can pull in discriminatory information. So there's a lot that can go wrong with it. But the reality is AI is here and it's here to stay, and it impacts every single piece of our lives. I mean, Dave just talked about, you know, the grocery piece of it. It's insurance decision-making. It's part of that. It's part of health decision-making for all of us. So it's embedded in every single thing. It's on all of our, whether you want it or not, do a Google search. The first thing that comes up there is AI answers. Yeah, so intriguing and horrifying, that's what I'm saying.
I mean, just two simple applications I think of is one, I think the banks would like to use some form of AI to help report their HMDA data back to the regulators so that they just don't get dinged for some error. And I think, you know, so there's going to be uses. And then I think, you know, at NHS, when we were doing lending at NHS, and I think Anthony and your team are still doing the same thing, the secondary markets already use like a computer algorithm to decide whether you're going to get your loan or not. It's based on a lot of factors. But where NHS specializes, they did manual underwriting. It is what it sounds like. It's the individual lender looking and understanding the whole story of the family. Maybe why they, you know, missed a payment there, but it didn't mean that they don't know how to save, things like that. And so if we could get AI to replicate manual underwriting, but I don't know. I think maybe the part of manual underwriting is the human factor there, one human listening to another and compiling the data. But if we could get AI to do that, I mean, that could be a positive for mortgage lending. It's just what you said. It's thrilling, exciting, and horrifying and scary all at the same time. So I think we got to keep our minds open. I think we need to understand it, though, and stay on top of it, and then regulate it.
Yeah, no, I really agree with that. I mean, maybe surprisingly for being the regulator, but I do think that it's not like manual processes uniformly serve us well. So it is, to me, I think, and, you know, as a power user of AI myself, there are use cases where this could be great for standardization and actually for expanding the credit box, right? Certainly, this can't be disentangled from the consolidation that's happened across the banking sector and in the mortgage lending space during the same time period, right? And I think we've touched on this point before, but the way in which community lending has been sort of consolidated out of existence in many ways has not been great, I think. I think it was, you know, sort of community-based lending, relationship-based lending, when possible, has sometimes allowed for an expansion of the credit box. So to me, are there ways in which AI can fuel that sort of a model for CDFIs, for mission-based lenders? I see a lot of promise there. I hear from a lot of those lenders. They want to use these tools to accomplish that end. As a regulator, I just want you to show me your work. Show me all the relevant data, and that's, again, at the end of the sort of discussion here about HMDA. If you show me the way in which you got there and I can evaluate it, possibly with my own AI, a lot of the risk goes away. I am less concerned about this in mortgage than I am in other financial products because I have the data.
So I know we have to wrap up, but so this is my final prompt. I think it's important to offer closing words, but to be really specific in terms of like who you're speaking to. So I'm going to give you 3 archetypes that you could speak to: the organizer, the journalist, right, or the civic leader, right? Pick one, and as they think about the future of HMDA, what would you add? What would you tell them to focus on?
I can go first. I mean, there was a point made earlier that, maybe history doesn't repeat itself, but, Ken Burns just released his American Revolution documentary, and he says, history doesn't repeat itself, but it often rhymes, right? And I think, for me, it is important for us in an era in which there is such an imbalance between individual and corporate power to think through the lessons of HMDA about addressing that on our own behalf for something as critical as housing. It has literally been proven that people can unite to do this and to put guardrails and to rein in and check that power to ensure fairness across the board. That's what I would say organizers today should be doing.
I don't know my audience, maybe everybody. This is something more fundamental, which is Natalie Moore's, I think, going to wrap us up today.
Yes.
In her book, Southside, she talks about Southside Chicago, but there's a one sentence in there that says Sacramento, California is the most racially integrated city in the country by neighborhood. Well, why did CRA excite me? Why do I see the world a little different than other people did? Why did I come to Chicago and be like, oh my God, you have burned out buildings that haven't been rehabbed in all black neighborhoods? Like, what is going on here? What decisions were made? It's because I grew up in Sacramento, California. I grew up in a place that is economically and racially integrated. And I just want to say your personal story, and you heard it on the first panel too, does matter, and we all should get to know each other's personal stories. And in doing that, we'll get to know each other better. Then we can come up with new ideas, bridge differences, form coalitions, and make whatever we need to happen, HMDA or else, happen.
You would think I would have enough time with 2 speakers to come up with a good response there. I think, I commented earlier about, the baby boomers and keeping, keeping the context. So listening to the history, hearing about the history, learning about the history as we did and as we are is hugely valuable. And a lot of that, that generation and the older of my generation, I'm going to be having my own 50th celebration in a few months. Keeping the worldview flexible and learning from the younger generations. Being stuck in this, like, oh, these damn kids can't afford houses because they're buying lattes and avocado toast. It's just not helpful. It's not. And then you follow that up with an article of like, oh, well, the economy is where it is because they're not spending money the way they used to. It's like, well, do you want us to buy the avocado toast or not? I don't understand. So that two-way learning is sharing the history, but also learning the context of where we are today to be able to develop laws, policies, rules, regulations, infrastructure that's going to well serve the coming generations.
Friends, let's give it up for our panelists.
So I was giving Amy Nelson an escort to the 6th floor where they have some offices here that she can work on. She has a meeting of the CFPB's Advisory Council. and we were giving each other a hug. She has to get on the road immediately afterwards because it looks like the weather might get ugly on the way to Indiana later. And I said, well, we need to start thinking about what good trouble we can get into next year. And her response startled me, and I'm going to share it. She's like, I'm not so sure there might be much of next year for fair housing counseling organization and fair housing centers. The decision that's made over the course of the next few months with regard to where HUD allocates its resources for a lot of the organizations that Amy and Bethany run could really leave a gap in our industry that cannot be filled. So I'm going to do my pitch, sort of what Laurie did earlier. If you're a funder, if you know funders, we have to protect these fair housing organizations. We can't win without them. So please. So with that said, we started the morning in a basement of a church in Austin, for those of you who are here for the video. We spent much of the day talking about the power of a woman who was born in Lawndale. And at the end of the day, we started to get a little bit wonky, although we started thinking forward creatively. I couldn't think of a better way of closing as I was talking with the team that put this together that I want to recognize, and Bruce Orenstein, Ted Wysocki, Calvin Bradford, and Jane Doyle in making this all happen. So I want to recognize them and thank them for their efforts. How do we tie this all up and humanize it? And I couldn't think of a better person that popped up immediately than a daughter of the South Side, a quadruple threat, a journalist, a professor, a playwright, and a native Chicagoan who has found a way to describe with promise some of the dark side of Chicago and how we're climbing out of it. And as such, as soon as I mentioned the name Natalie Moore, everybody on the room was like, she's perfect, but will she do it? I'd like to introduce Natalie Moore.
Oh, good afternoon, everyone. It's really cool to see a packed room like this with a bunch of policy wonks who want to talk about housing. And I won't be up here very long. I know we're getting to the end of the day. But I want to thank Woodstock for doing this. I have written down a lot of notes for potential story ideas that I will be following up on. So I wanted to synthesize some of the things that were talked about, just to leave you with some things as you leave and things that stayed with me. One, please check out Shame of Chicago. I was on the advisory group with that for Bruce, and throughout the process, we've always talked about how do we keep this conversation going? How do we get these episodes in more people's hands? So you already heard that you can go on WVON TV to see it. I think Amazon Prime is another one. And also, this is just so important to get into Chicago public schools, or really any schools. I didn't learn about this history in school. And I tell the story about how I did a history fair project in 7th grade on the history of Chatham, the neighborhood I grew up in. And when I look back, it was a pretty terrible project. I wanted to focus on how the neighborhood used to be white and how it turned black. And all I did was have these anecdotes about people who went to the Rhodes Theater. But I had no understanding, and nobody was teaching me or giving me the tools to understand white flight or how these neighborhoods changed. I just thought, well, they just left because black people came. And that just isn't the full story, because they had to have somewhere to go. I always like to say that white flight wasn't a bunch of white people going out into the open prairie and pitching tents. the government rolled out the red carpet for them with loans and highways. So please, the young people in your lives, find ways, I think that is an ask that is here today. I also took away, and I always say this too, that we will save ourselves. And so I was really glad to hear that as a theme. Harvard isn't going to save us. Northwestern, where I work, isn't going to save us. It's regular people and neighbors. And I was really thrilled to hear that the lawsuit has been filed to keep CFPB open because people are hungry. How do you publicize information? I texted my friend Amanda Williams, the artist who's done redlining. I said, there's a panel here, and somebody talked about a lender did not know what redlining is. Like, how does that exist? And I know I have been subject to mortgage companies because you start off with the bank. Like, my first mortgage was with Bank of America. Well, it really wasn't, because you start looking who it sold to, and it was just some random woman who owned my mortgage. Also, because it's the holiday season, I encourage you, when savings and loans came up, my favorite holiday movie is It's a Wonderful Life. And it is really a housing story. It's not about, it's about friendship and faith and community, but I watched it as a kid, and then I was like, oh my God, and my uncle used to be a bank examiner for the feds, and I was like, oh, he was like the guy coming in when, the money was about to be lost. So, these are all white people in this movie, so it's not the exact same context, but it is about capitalism and greed and somebody making a choice to say, we want loans for other people, not just the rich people, and we don't want them to be renting only to the mean old Mr. Potter. I want to thank Woodstock Institute for helping me as a journalist by always having this data available. But how do we get the data into other people's hands? So I was in DC this weekend, and my sister used to work in government, and she was a special advisor to Mel Watt in the Federal Housing Finance Authority. And she had worked on Dodd-Frank. She was a deputy assistant secretary in Treasury, all of this under the Obama administration. So I said, I have to give some closing remarks. Can you write what I'm going to say for me, please? And she said no. But I said, what would you say? And so I wanted to share, I did cheat a little bit. She said, for her, transparency is important. This HMDA is about transparency, and that is priceless. And I said, well, how have you used HMDA? She said, well, I'm not a data statistician. I said, I know that, but how has it helped you? And she said that it has helped her understand data to give to policymakers and give to lenders and to empower local and state communities. And that this is data just like the Bureau of Labor Statistics, just like economic data. And really what is happening is that this is a threat. I often tell people, they're great activists here who do all kinds of work, but I have felt that housing can get really wonky when you talk about zoning and HMDA and all these things that are really important. How do you get people excited about that? And it's hard. And so I think communities have to find different ways to make this palatable for everyday neighbors. And in closing, I want to say that hearing people talk today made me think about the South Shore raid, because that is a housing story as well. What is the HMDA data in South Shore? We know anecdotally that these multi-family units are not owned by people who live in the community. They're owned by people out of state who are holding on to property. This predates the Obama Center. They've been hanging on for decades, waiting for this to turn into some luxurious lakefront property. And so I think it's, data is power, naming names. These were things that I was thinking about, and they were said earlier. But I do think that South Shore building on 74th and South Shore Drive is a spoke in everything that has been talked about today. Those owners don't live here. They let it deteriorate. And it has moved from, a horrible Black Hawk helicopter story, because these people have to move out this week and aren't given enough money and have no place to go. And then what is going to happen to that building, and whose hands is it going to go into? And so I think this kind of storytelling, all of this is about storytelling. It's what I do, but it's not just journalists who can do the storytelling. How do you tell these stories about HMDA and the homeowners, all that paperwork you were filling out? Why is it important? So thank you, and I will turn it back over to Horacio.
Thank you so much, Natalie. In closing, the story of HMDA obviously isn't over. We don't know how many more chapters are written, but I know there's a sequel. HMDA was the basis from which Section 1071 of the Dodd-Frank Wall Street Reform Act was based. While HMDA didn't fix as much as we wanted it to, and it may have overachieved somewhat of the lower ambitions of what some of the founders had implied. Remember, census tracts and being able to get granular geographically was not a selling point. They didn't even try for that. That came later, after people started realizing the value of what data was being provided. Imagine the power of that for small business loans. That is what was passed in 2010. I'm hoping I'm not dead and buried by the time we actually get to see some of that damn data, because the banking industry is suing. We don't want to provide it, probably because they know what it looks like. Kind of depending on the administration, they want it, then they don't. There's a movement afoot to be able to see whether or not Congress can actually repeal that particular section of Dodd-Frank. But the power of data, the weapon of disclosure, it changes lives. Maybe not as much as we want it to. It's not going to be the panacea that sort of all of a sudden there's going to be unicorns flying and Skittles falling on everybody. That's not how it works. But what it does is it cuts the most egregious players out of the industry because of the fact that there's nowhere to hide. So that is one of Woodstock's next priorities for 2026. We cannot create a situation where legislators can hide from the disclosure that we need, both for mortgage lending and for small business lending. My favorite holiday movie is National Lampoon's Vacation. And there's a very specific reason for that. I mean, most of you probably remember a good chunk. I'd be surprised if most people watch it sober. But there's a storyline there that I find particularly appealing. The boss is a jerk. He's the one that decided. At the very end of the movie, everything is about, am I gonna get the bonus? I really rely on that bonus. It's a story about finance. It's a story about budgeting. It's a story about hope, relying on something. And Randy Quaid, whose character is absolutely fantastic in this movie. But Randy Quaid gets in his beat-up RV, goes to the boss's mansion, and kidnaps the guy. Drags him back to the house. The wife is in a fur and her negligee, calling the police and trying to figure out what happens. And drags him into the house where the entire family is sitting there and are appalled at the fact that Randy Quaid kidnapped the boss for his brother-in-law's purpose. But then the boss starts realizing the implications of what he had done. The wife shows up with the SWAT team, it crashes through the windows, and the boss says, well, wait a minute, maybe what I did wasn't exactly great. What did you do? Remember when I was trying to make a little bit more money for the company, And she turns to him like, you didn't. You cut the bonuses? It's like, I cut the bonuses. The story for me, as somebody that has been on a journey since the early 90s when I left Wall Street and came to the Federal Reserve and got involved in the community and economic development world, is oftentimes when you make this issue real. I'm not saying go and kidnap Steve Steinauer, president of Huntington Bank, and drag him to Lawndale or Inglewood or something like that. Although, no, sorry, no, I'm not going to do that. That's on tape, shit. But when you make this real, those tours, the stuff MPA was known for. Acorn used to do this too. Are you allowed to mention them still? I don't know. I mean, there was good and there was bad. NTIC was good at this. These are the people that perfected community organizing. But you know what was the greatest power of community organizing? Was the fact that they would drag the people making decisions into community and say, are you okay with this? And 10 times out of 10, they're like, oh, geez, we've never been here. That's the power. And with the data, to be able to show, and this is the impact, there's hope. So I want to close tonight saying we need to continue to find a way to organize the community because, like we've heard often, nobody's going to save us but us. We still have access to the people to learn from that did this in the 70s. They're not going to be around for, God, that's morbid, I'm sorry, never mind. But we have a lot to learn from them. And we have the right organizations, and God damn it, Chicago is known for this. You know, every city is screwed up. I've lived in a lot of different cities. The trick is finding cities that are screwed up in ways that work for you. And Chicago, I mean, it's sort of like people. But Chicago, for better or for worse, a lot of these laws for consumer financial protection and anti-discrimination unfortunately exist because of Chicago. But Chicago was the first one to sort of stand up like, yeah, we kind of screwed that one up. And they're the reason why a lot of these anti-discrimination laws exist in the first place. We can't stop now. There's a long way to go. So let that be your motivation to do good trouble in 2026. Thank you very much, everybody.